Hi guys, and welcome to the second installment in what is my weekly market breakdown. Um, Before I get into the three pairs that I'm going to analyze today, I just want to go through my performance last week. I actually have open here the pound Australian dollar chart, and this is pretty much the same setup that I ran over in last week's video. We were trading around within this region between 1.8 and 1.81. And I did highlight that I was either looking for a dive back into 1.8, some rejection and consolidation, and potentially take a long, short-term long back into 1.81. But what I also did highlight was I was looking for 1.81 to be broken, retested, and then for longs to be taken around this region up into 1.85 or some more appropriate targets at the time. Now, this wasn't a trade that I managed to actually get an entry on. I did set a buy order, which I will go through at the moment, but unfortunately it wasn't activated by a few pips, and I actually missed my entry on this one. So just following the exact same structure that we went through on last week's video, we took a dive. We were consolidating in between 1.8 and 1.81. We actually broke below 1.8 in the new week. A lot of people would have shorted around this region, and instead what price did was actually turn around and put in some very strong bullish candles, eventually breaking 1.81 resistance. When I saw this, it was then the case of, okay, resistance has been broken. My preferred entry would be when it turns back into support, and then I can look for a long entry. So I was kind of watching this pair throughout the week, and we eventually had this setup form. After the 1.81 region was broken here, price travelled up until it later descended. This candle perfectly retested 1.81 and also sat just above the 50 EMA. And when I saw this candle, it was then I placed my buy orders. Now I'll just double check with my MT4 platform on where I actually placed this buy order. So my buy order was actually placed with an entry of 1.81139. The stop loss I was looking at holding was 1.80857, and the target I was looking for was 1.8400, a nice round number. If we did get the pullback and activation of this buy order, it would have pretty much given me a perfect risk to reward of 1 to 10. And it was actually the 15-minute chart where I was eyeing entry. So I was looking for an entry obviously on the 15-minute time frame. We had the dive back into 1.81. Two initial rejection candles here, two bullish candles. And this was when I placed my buy order was here. I was looking for that retest back into 1.81139 for an activation entry. However, it didn't come. Instead, price just instantly exploded from this zone here, reaching highs of around 1.834, which still would have been a great trade, around a 1 to 8 risk to reward. So after that break of 1.81 and retest, we actually formed a perfect 4-hour candle here at around 10 o'clock on the 7th of February. And to me personally, this pair looks like it's going to rally. An appropriate target obviously for me would be 8.4 to 8.5. However, I have missed my preferred entry. With no emotions attached, I will just write a line under that and move forward. It's not a pair I'm looking to obtain an entry on anymore, because I feel like if we do dive back into 1.81, there's too much bearish momentum to continue a long trade. I've missed my entry. I'll write a line under it, and it's not a pair I'm looking to trade for the week ahead. So heading into this week's analysis, I just want to start off with the Australian dollar to the Japanese yen. This is also a pair I did break down in a previous video, where we actually stood at this candle here on the 1st of February. I was looking for price to pretty much extend its highs into the 80 key level. Unfortunately, we didn't. Instead, we only made it up until around 79,841. So we're about 16 pips off there. And instead, price collapsed. We had an extremely strong bearish engulfing candle here, engulfing 1, 2, 3, 4, 5. 5 bullish ones, and we actually penetrated the 78 region, and we now currently sit on this short-term area of support here. I'll just head into the higher time frames just to recap over where we stood with this one. We did establish a preferred bullish bias on the higher time frames. Again, we came to the rejection of 72 to 74 with a strong wick rejection. We failed to make lows past these regions here. To me, I don't want to be trading this pair short because I feel like the majority are, and that's not how I trade. So I marked on this region here after spotting on the weekly time frame a few wicks. We got 1 wick into this region here, 2 wicks into this region here, and the third one with last week's candle close. So looking at that daily descent on the lower time frames, we can actually see here that we reach around 79,800s. We absolutely collapsed. And we currently found support in this region, which I spoke about earlier, which has acted as previous short-term support on multiple occasions. Now, price itself on the lower time frames is actually in a bearish trend. And therefore, to continue the bearish trend, we are looking for a lower high to form, which it has after hitting the support. And following a lower high, we are looking to make lower lows. Now, obviously, I'm not looking to trade this pair short because I do not like to trade with the trend or with the majority. So what I expect price to do is at least make a dive back into the support region here. So I'm looking for price to dive back into the support region. Now, if we were following bearish trend structure, we will break this region and we will make new lows past here, which I've marked on at 77,547. If that happens, then I will not be looking to take any long trades at all. My long bias will be invalidated, and it will be the case of sitting back and watching price over the course of the few weeks to establish a new potential setup. However, what I am looking to see on this pair for me to take an actual trade is, let's just go down on the hourly time frame here. We can see bearish trend structure a little more clearly. We consolidated around the region of 78. We formed a lower high just above 78. We collapsed, made new lows, and it looks now that we're forming a new lower high. So again, following bearish trend structure, we should make new lows. However, if we fall into this region here and fail to surpass 77,547, and instead we fail to make new lows, we dive down, we might reject this, have a few wick rejections down below this support area here. We might consolidate back and forth, like so. And if this happens, what I will be looking for is price to make a wick low, but not a candle low, close back above 77,547, place in some bullish candlestick confirmations, which I'll also be looking on the 15-minute time frame, and then maybe we can look at a short-term long back into the region of 7,800s. See, this idea here is a very, very out there one. It's not one that is based on current confluences. It is one that if the confluences arise in the future, it is a trade I will be jumping on and looking to trade. As I say, I'm not looking to short this trade at all, because I think everybody else is looking to trade this short, so it's not really the way I trade. It's not the setup I'm looking for. So it's just a case of sitting on my hands at the moment and watching how price moves and establish itself. I am expecting a dive back into this region. As I say, a break and candle close below this area will mean that I will not be looking for a long trade at all. However, if we fail to close below 77,547, and we do consolidate in this range and we do play some bullish candles, then I will be looking for a trend reversal setup from the hourly to 15-minute time frames, and I'll be looking to take a short-term long back into the region of 7800s. Again, because this setup hasn't really established itself at the moment, it's something that if I do take a long entry on, I will be posting it on my Instagram and keeping you guys updated throughout the week. If you guys want to go over and follow, it is NickLindleyFx, and it's where I usually post the majority of my entries on my Instagram story. So make sure you go ahead and follow that, just so you don't miss any of my entries this week. So heading into one of my preferred pairs, it's actually the pound to US dollar. I do actually like trading this pair because it also coincides with the fundamentals that are going on at the moment, i.e. Brexit and all of the trade wars, etc. with the US and China. And the way that I kind of establish my own biases on this pair is taking those fundamentals with a pinch of salt. It's about reading between the lines and seeing the hidden meaning between what's going on, and really establishing trading ideas based on that alongside technical confluences. So it bridges together fundamentals and technicals for a much more valid trade. Now I'm actually going to start on this pair on the weekly time frame. We've been very bearish for a long time, especially since all the Brexit was announced. We've just been collapsing in price until eventually it looked like all the bears were out of steam. Now, it could be that this bearish move was retail traders shorting because they didn't understand what was going on in the world, or it could have also been market manipulators pushing price down, using news and fundamentals to bring retail traders in on this move as well, and then obtaining massive buy orders at extremely low prices for them to then benefit from a rally in this pair. So what I've done is I've actually broken down a weekly trading range here, and this sits between 1.28 and 1.32. Now, when we initially moved into this zone here, we had a rejection of 1.28. We consolidated between the two before eventually breaking down and making new pound to US dollar lows. Now, looking at this weekly consolidation range in between 1.28 and 1.32 in more detail, we can see that when we initially entered this range, we rejected 1.28 and we consolidated between 1.32. We bounced in between the two before eventually breaking 1.28 and making completely new lows on the pound to US dollar. When these new lows were created, price then went into a series of consolidation. We retested 1.28. Remember, when support's broken, it usually acts as resistance, and we began bouncing between this region here. We eventually dived back above 1.28. Like so, and then it was a case of reviewing where we were going with this pair. We broke bearish trend structure. We found 1.28 as an area of support. We bounced up to 1.32. We consolidated again by bouncing back up to 1.28 before a huge bullish rally that broke pretty much 1.32, 1.35, 1.4, and it looked to touch 1.45. But instead, price, probably followed by fundamentals again, collapsed very sharply, entering back into this region here. Now we consolidated between the two again for some time until eventually breaking below 1.28. However, the bears, the sellers, didn't have enough steam, and instead price just pretty much slided all the way back up into this consolidation region. 1.32 acted as resistance, and we are currently in the phase of falling from that rejection. So it's a case of taking this pair with a pinch of salt, and the previous bull rally into 1.32 was very unconvincing. I found there wasn't much trend structure to it. It just kind of slided all the way up, as we kind of saw on the weekly time frame. There wasn't many pullbacks, there wasn't many great entries for longs here. So it's just a case of looking at how price is acting now. Looking at the rejection of 1.32 on the daily, we've currently descended. We reached the 50 EMA and the SMAs here, and actually Friday's candle had the opportunity to make new candle lows, but instead we've actually rejected this area of support, which is much more clearer on the lower time frames. Now this is the sort of play on the daily time frame that will convince me to take a long. Now, the reason why I actually like these daily setups, this daily setup for a long, is because pretty much after the rejection of 1.32, you would expect price to descend back into support. Or at least if it wasn't descending, it would be trending nicely. It'd be placing lower lows followed by lower highs, lower lows, lower highs, lower lows, lower highs, until eventually 1.28 was hit. But instead, what has happened is we had a descent, we placed a lower high, we formed a lower low, and we've entered a region of consolidation. And what price has done is, with the 7th of February daily candle, we failed to make huge lows. We retested the 50 EMA and we formed back above support. The following day, on the 8th of February, we again had the opportunity to break below support and make some new candle lows, but instead we closed back above support and failed to make new lows. So for me, on the daily time frame, this suggests that the bears are running out of steam, and if we are looking to rally long, then it is a potential setup. We could go all the way back up to 3.2, but if we are still within a bearish trend momentum, then at least what price might do is make a new lower high back into the region of, let's say, 30500s, before then continuing its descent back into support. Now this is a trend that we could this is a setup that we could look to trade. Even though price may still be within a bearish trend, we can take a short-term setup with a great risk to reward and benefit from that pullback in the market. Looking at that consolidation on the lower time frames, more specifically the 4 hour, we can see here we descended into 1.28, rejected it, had a second test of 1.28, retested resistance, came down 1, 2, 3 before eventually breaking out, which of course proved to be a fake out. We had the opportunity to make huge lows. Instead, price put in an extremely strong bullish engulfing candle, which led to another test and rejection of resistance, followed by just more consolidation between this range, 1, 2, 3, 4, and we currently now sit on support. Price itself hasn't really formed strong bullish candles to confirm an instant long on this pair, but what I am looking for price to do is at least make one further dive into this region, one final test of support before potentially consolidating, similar to what I was saying on Australian dollar to the Japanese yen. And then if we can see some bullish candlestick formations form and price's trend structure looks to be shifting on the even lower time frame, such as a 15-minute, then I think a short-term long can be activated back up into at least the region of 1.28, and maybe even higher than this. We might even look at the region of 1.299, or even just this candle high here around the region of 1.29963. Now you may say that that's not a huge shift in price. However, if we were looking at the 15-minute time frame and we were very accurate with our entries, almost like a sniper, then we could have let's say we entered on a bog standard round number like this. It would have to be supported by confluences, of course. We could have our stop loss just sat below support. Let's just be even and place a stop loss of a round number of 15 pips. A trade back into the region of resistance would look at something of a 1 to 3 risk to reward, which isn't too bad for a 40 pip move in the market. Now, if we are being a bit more ambitious, we might look to trade it up into the 1.3 area, which would give us a 1 to 4.3 risk to reward. and we might actually even obtain a better entry or a tighter stop loss. And that's the way I'm looking to trade this pair. If we do come down and break below this support region on the 4-hour time frame, where price still looks very bearish, we place this very strong bearish engulfing candle here. So if we do break and close below this support on the 4-hour time frame, then I will be looking for price to make a descent back into the weekly support, and I won't be touching this pair until it reaches that weekly support, where I would then look for long entries. So I hope you guys enjoyed today's video. I only actually managed to cover 2 pairs instead of the initial 3. That's because I was going to do some analysis on the Australian dollar to US dollar, but after re-looking and revisiting that pair, it wasn't offering favourable price action, and I just didn't want to put that pair in the video when it wasn't going to offer me personally a potential entry. If you found this video beneficial at all, or just generally interesting, then please leave a like rating and at least subscribe so you won't miss next week's breakdown. Also, if you want to keep up to date with what I'm trading and how I'm trading it throughout next week, go ahead and follow my Instagram, NickLindleyFx. I'll be posting all of my live entries on my Instagram story, as always, and I'll be looking to try get back to posting daily content. So please like, subscribe, go and follow my Instagram, and I look forward to recapping with you guys on next week's video.